numbers that have come through. But Prince Pipes posted weak set of Q3 earnings. The revenue growth is subdued at just around 6%. It's the margin compression that has disappointed the street, down to around 10% from nearly 17% we saw last year. The positive, however, is that after a steep 8-month-long correction, PVC pipes prices have recovered by 13 rupees per kg in December. Nihar Chheda, the Associate Vice President, Corporate Strategy at Prince Pipes and Fittings, joins us now. Nihar, thanks a lot for joining in. First, on the margin picture, it's a steep compression that we've seen over the last many quarters. Do you think it could get to single digits before recovering, or do you think the worst is over now in terms of the margin weakness?
Sure. So firstly, thank you for having me, Sonia. I think performance in the December quarter for us was actually heartening to see. And the reason for that is, as you're aware, the PVC prices have seen a steep decline. And the worst is behind us. The September quarter was the worst, where we actually saw a negative operating margin. And PVC prices continued to slide in October and November and only stabilized in December. Despite which, quarter on quarter, we were able to increase the operating margin by more than 1,000 basis points, while still also increasing volume growth by 35% year on year for the December quarter and a 20% growth for the 9-month period. So we have been able to not only improve margins sequentially, but also gain market share on robust volume growth. And lastly, we have also been able to focus on cash flow with a tight working capital, and as a result of which today, balance sheet is extremely strong, and we are net cash by more than 150 crores today.
All right, let's take that part by part, Niraj. This is Nigel on this side. Well, as you said, PVC prices, they've stabilized, and in fact, now you're pushed through a price increase, which is good news. The question to you is, the last quarter, quarter 3, volumes are very, very strong. So has this price increase dented demand? If you would give us a sense, what could the volume trajectory be for quarter 4 as well as for FY24? What kind of a volume growth can you guide?
You see my product portfolio today, around 65% of our product portfolio is building material, which is plumbing and drainage pipes. And the end user for that is the real estate sector, which is doing extremely well. And whatever interactions we've had with builders across India, I think there's a very positive sentiment, and a sustainable demand can be seen for the next 1 or 2 years at least. And the balance 30% of my portfolio is agriculture pipes, where as a result of affordability coming in the commodity, the PVC prices decreasing significantly, I think we should do well across both sectors over this quarter and the next financial year as well.
Can you quantify it? What kind of a volume growth should we look at, say, for quarter 4? Can the volumes be as good as what it was in quarter 3? Give us a rough number. And since things are looking up, both on the real estate side as well as on the agricultural side, what kind of a volume growth would you guide for FY24, Niraj?
So I think it's early days today, so I'll stay away from a quantitative guidance, but I'm optimistic on what going forward.
Double digit, basically, Nihar, is it?
Yeah, I think it's definitely possible with the kind of tailwinds that are there for the industry. So yeah, it is possible.
Okay, it is possible. Now, what were inventory days for the quarter, Nihar? Because I think they had shot up to some 85 in the second quarter.
Correct.
Have they come off? You'd indicated they would come off, and has that stabilized, that issue?
Correct. So inventory days have, significantly reduced. They're back to our normal of around 60 days. And along with that, the debtor days also have significantly reduced to around 48 days, which is why we are having a very strong cash position as of today.
Okay. Finally, what is the market share that you're sitting on right now? Has it changed compared to what it was, say, about 12 months ago?
Yeah, I think not only 12 months ago, but in the past couple of years, I think the Indian piping industry has seen a significant consolidation from the unorganized to the organized. Even within the organized, the top 3 or 4 players like us are, outpacing the growth of the market. And today we would be at around 7% market share.
And a year ago, it would have been around?
Around 5.5–6%.
5.5–6, so 150 basis points. Just a quick question on the working capital days. They have improved, but what is the steady state we should work with?
I think we're close to steady state. So I think today we're at around 44 days of working
44.
capital.
So you expect to hold on to that. And EBITDA per kg, could you give us a rough number out there? Worst of margins are behind you. What is the EBITDA per kg you're doing, and a sustainable number going ahead since the worst of margins are behind?
So I think we look at EBITDA in a percentage form, and what we're guiding is 12 to 14% EBITDA margin over a long term is sustainable.
All right, Nihar, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. Guys, by the way, yesterday there was a bit of a flutter